This is what the grid flagged today on precious metals, gold and silver specifically. Bearish in the short term as gold and silver decline amid Fed rate hike expectations and Gulf tensions. Though long-term sentiment remains mixed, with some analysts calling risk-reward positive after the pullback. Watch for continued Fed hawkishness and rising geopolitical tensions could push gold below 4,000, triggering further sell-offs and extending the current correction. Gold testing 4,000 support may offer a strategic buying opportunity for long-term investors if the level holds, as structural inflation hedging demand persists. Monitor the 4,000 gold support level closely this week. Consider accumulating on dips if the level holds, but reduce exposure if a decisive break lower occurs. And before I move further, this was posted June 24th. Precious metals just entered a bear market, and someone commented, unfortunately, the comment has been deleted. The comment was, "This aged well." And I did a follow-up comment basically explaining why I said it's bearish. Unfortunately, you can't really see it now because gold is dipping, so the individual unfortunately thought, oh, maybe I'm wrong. Deleted the comment. Ladies and gents, I want to be as clear as possible. I created this channel just a couple of weeks ago to document and present everything based on real-time data. I'm not trying to make up anything. My intention and mission is to give accurate data information so collectively we can make better financial decisions. And sometimes I'll give you my 2 cents where I see fit. If you play with emotions or bet based on your emotions, it won't age well. It's not that inherently I want stocks or gold or silver to go down, but if the data says something, nobody cares about what we think, and that's the real talk. So keeping all that aside, I'm not saying I'm gonna be 100% right on point, but I try to be, and that's why I encourage all of you to subscribe and follow the journey. Recently, billionaire Rick Rule talked about silver and how he sold most of his stash in Jan, all-time high. That's his game plan. He's a billionaire. Doesn't mean we all have to do the same. But if the big players do something, we gotta pay attention. Long term, I'm sure bullish because they will start the money printer, inflation will skyrocket, and you'll see it. But holding on to precious metals don't generate any yield, and most people are just chasing yields. Look at the semiconductor. Everyone dumped gold, silver, crypto just to catch the wave on semis. And now that's heated up, taking a breather. Anyways, keeping all that aside, let's dig deeper. Precious metals decline as gold and silver slip on COMEX. This decline reflects ongoing market uncertainty with gold down over 1% and silver slipping as investors weigh inflation fears and Fed rate hike expectations. This is gold right now, pre-market, $4,034. Gold falls as Gulf tensions fuel inflation fears, just as I said. And this is silver. And you know what happens if you're holding miners like me. If gold and silver goes down, miners take a beating. So gotta be very careful. $57 right now. It went up and everyone started calling me out. Well, not everyone, just a couple of comments. Oh, this aged well. Things take time to play. Give it some time. Again, I'm not saying I'm excited if all of these go down, but don't make judgments real quick. If I say this is gonna go down or up, it doesn't happen overnight. It can happen in a month, 2 months, or it can never happen. But again, I told you, I try to be very careful with the information I put out there. Gold falls as Gulf tensions fuel inflation fears. Where are gold prices headed in the second half of the year? With gold near 4,000, the second half outlook depends on whether inflation moderates, Fed pivots on rates, and safe haven demand persists from global tensions. And things only go up when people buy into it. And on top of that, we have massive manipulation. Let's not forget that. Today I may say something based on data, and tomorrow the insiders decide to do something else. COMEX decides to do something else. Play with their paper, silver, and gold, right? Gold, silver rebound as Fed hike odds cool after oil slide. This is 2 days ago. Pay attention. Time matters. 2 days ago. 23 hours ago. Central banks and institutional investors continue to view precious metals as core portfolio diversifiers, which may limit downside even amid rate headwinds. This makes sense because China is a core buyer of gold. Gold's pullback to 4,000 may offer buying entry for long-term investors. Let's talk about silver real quick. Poor man's gold. Silver. Silver market sentiment is cautiously bearish, with the metal holding near a key support level at $57.97. A weak IPO for a silver miner and correlated sell-offs dragging down crypto assets offset only by a potential demand catalyst from Indian tax cuts. Persistent inflation fears and geopolitical tensions continue to pressure silver prices, with the metal facing headwinds from a stronger US dollar and competing capital flows into crude oil, which has surged 11.4%. Crude oil spot is sitting at $71 right now, pre-market. And you know, there's a tension going on. The elevated gold-silver ratio at 63.9 and the possibility of India reducing import taxes by December create a compelling medium-term bullish setup for silver, likely offering a favorable entry point for patient investors. Maintain a tactical long position on silver with a focus on the gold-silver ratio strategy. Consider scaling into positions if India confirms tax cuts, while setting stop losses below the 57.97 support level. Is it a good time for retail investors to get in? Based solely on the provided scan intel, the situation is mixed, making it a cautious environment rather than a clear good time for retail investors. A potential opportunity exists with the elevated gold-silver ratio at 63.9, which historically signals that silver may outperform gold soon, suggesting a possible entry point for those bullish on silver related to gold. Additionally, India's potential tax cut on silver imports by December 2026 could boost demand, offering a medium-term bullish catalyst. However, the scan also highlights significant headwinds. Silver recently bounced to 64 after hitting an 11-week low, but analysts warn of headwinds from inflation fears and geopolitical risks. Furthermore, the weak NYSE debut of silver miner Cinda after a 213 million IPO signals cautious investor sentiment toward the sector. The scan does not provide enough price momentum or clear positive signals to recommend a broad retail entry. The data suggests waiting for confirmation of sustained bullish momentum for a clearer risk-on shift. Again, ladies and gents and my investor friends, if you're new to my channel, I would really appreciate if you subscribe. Follow the journey and I'll keep you posted on everything latest. That's all I have for now.